Hold on
All
one
right.
second. I'm gonna put these eggs into a bowl so that my cheese melts,
Yeah.
and then uh and then we can get started. So I started
Nice.
making these really weird eggs that
Yeah.
I
This is phenomenal.
it's like ridiculous. All right,
And I think that's how we start this chat. You got to melt your cheese. The
I gotta
yeah,
melt my cheese.
yeah.
All right,
I
let's see.
love I
How's the
love
lighting here?
the spliff shirt, by the way. The world is waiting. It's going to know very soon what's going on with spliff. But I just wanted to say congrats. It's been an insane couple of months. I know I reached out to hundreds of VCs, got a lot of pats in the back, a lot of I could smell a lot of envy. I think a lot of banker types wish they were us, to be honest with you. But ultimately, I got a lot of very polite passes. I know you pivoted and had some unbelievable success, and congrats on this. It's fantastic. But um, I already, bringing on Sean, the new CTO, doubling the space in Maryland, doubling the size of the engineering team. I mean, things are moving fast. But I wanted to just get a sense. I don't know how much we're sharing right now, but get a sense of, what just happened, because it really was pretty stunning, the way you pulled this together so quickly.
Yeah, I think in general, it was a transformative year for us so far, and we have a lot more to go. Um, we still have 25% of the year left, and we've already had a transformative year. Um, I've been in cannabis now for a long time. I've been a part of very, very big raises, in frankly, even earlier on. And there's always been a stigma attached to cannabis in general, right? If you're using cannabis,
That's
oh,
that's what I was hearing from my crowd. It was like everybody was jazzed on the numbers, which are phenomenal, but then they would be like, "Ooh, cannabis," you know.
yeah, I love that. Oh, y- y- I love your business, but I can't do it, right? I mean, what a ridiculous thing to say, it's like dating someone, oh, I love you, but I can't, right? It's
I mean, the past thing. I mean, production as a service, basically SaaS for producing pre rolls, set a lot of hooks before they realized it was pre roll cannabis.
yeah, right, yeah, exactly. Yeah, they're like, oh, I'm sorry, this deal's up in smoke. But I um so I tried to learn around every raise that we do, what we could do differently, and also our company and what we did. I mean, I think we launched a very innovative company. Um, Frankly, it doesn't work if we don't believe we have the best technology, and I think that traction is really um an understated need. I think in cannabis, there's an even bigger emphasis you have to have on traction, really profitability. If you didn't get another customer, you just maintained your current fleet, would you be successful? And we would. And that creates the basis. But to be honest, it's not always rewarded in the financial markets. And that's not unique to cannabis. A lot of companies, I mean, look at Uber. Uber didn't turn a profit for a very long time, and then their first profit was like $8 million off of, $35 billion in sales or something like that, right? So, point is profitability isn't always rewarded, but in a financial market that cannabis has, I think you really don't have a choice but to be profitable. You can't depend on things like safe banking to pass or federal legalization. Um, those are going to be catalysts for everybody operating in the space, and certainly for new entrants. However, if that's what you're relying on, I think you're making a big mistake because I remember when we raised capital in 2015, we were looking at decks that said that full national legalization by 2020. I
Yeah.
mean, we're 4 years after that. So I think you have to be in control of your own destiny. And that's when creativity really comes into play. Um, you know, uh, uh, there's when you look at debt financing and equity financing, people have their paradigm, how they invest, how they underwrite. So for debt financing, there's sort of, you've seen GTI just did a great refi. you've seen a lot of companies do great refinancings at 100, $200 million because they're that's the check size they write, or that's the deal that they syndicate. Um, on the other side, you have really, really small guys where it's too small. It doesn't facilitate your business needs, right? They'll go up to say 4 million or up to 5 million, and then there's sort of this real lack of the middle market in the cannabis space of you know fast growing companies. And I'll kind of get to what this really is in the traditional industry, but and then on the venture side. Um, if you're more than a few years out and you're profitable, you're not interested in selling 20% of your equity for $1 million, right? I mean, it's the valuations in cannabis really don't make any sense, and they'll say, well, the public MSOs are trading at nothing, and or they're 90% down, and that might be true, but they're also not trading on the New York Stock Exchange, so you're not moving volume, you don't have institutional capital moving around in the industry. So I think for institutions to use non-institutional money markets essentially to do the basis of why they should get a better deal, I don't always think aligns. So, but that's how they value deals, and so you can't, Al, our COO, right? He'll say, you can't control people, right? You can't control how other people operate their businesses or their funds. Um, you can hope to influence them. You can only do what you feel comfortable with. So we looked at our current capital stack, the debt, equity. We said, what type of instrument do we need to continue to grow at the rate we're growing and do the things to really delight our customers, um, which is supporting our staff, and we'll get into that. But um, it came down to what we really needed was a venture debt style instrument. There's no venture debt in this industry. I mean, not really. And there are no firms sort of the right size and underwriting capability, in my opinion, to do venture debt. And so a traditional venture debt deal is sort of a higher interest, typically a shorter term um, deal, and with a very, very low dilution. Um, and that's really the kicker. They want to be a part of the deal, but they really want their money back. Um, and so venture debt, it can come in various different forms, and so I'm sure someone will post and say, you don't know what you're talking about. Venture debt works like this, and that's okay too. That's the hypocritical nature of
Yeah.
posting anything online. I will be wrong, I can guarantee you. But where I'm right is we created an instrument that was easy for us to sell, that was really attractive to investors, but worked for our business very, very well. And that really is what I think a lot of founders need to understand is you have to create a win-win situation for your company, right? And for your investors. And if you can't find that, I think you spend a lot of time trying to force the capital raise, or you spend a lot of time kind of arguing and trading term sheets around it. And at the rate we're growing and in the things that we're doing, me spending 6 or 7 months raising capital is a real distraction.
And that's my thing. I mean, you use the phrase easy to sell, and in reality, nothing's easy to sell. But if you look at the actual, what just happened and the metrics, I mean, I think we did the elevator pitch in the 4th of July, right? It was literally the
Yeah,
4th of July week.
so
It was,
exactly. We have a requirement. Most companies do, especially LLCs, to go to existing investors. So we sent out a message on July 1st, July 3rd, I think, and we have a certain waiting period. So we went through that, and during that time, I used it to sort of tenderize, the deal with not non-current investors, like, hey, like, this thing's going to come, it's going to have a short window, really popular, my existing investors are really excited, and you know we had verbal commitments before we had the legal paperwork done.
That's what I'm saying. I mean, it
Yeah.
was, I'm just looking at the numbers here, and I mean, we got straight to the point in an email, and it was 78% of the recipients engaged with the deck.
Yeah.
Which is, again, easy to sell. I mean, that's
Yeah.
that's pretty. That's a pretty engaged audience for a pretty compelling pitch.
Yeah. I also think, what's really good also is broadening your cap table, right? I'm really, really happy at the uh, way our raise went. We got a lot of interest from existing investors, and we got some interest from non-existing investors, and it's to everybody's best interest to continue to broaden that cap table because, you know, this industry, look, I'm as optimistic as I can be, right? Which is like safe banking is going to pass and it's going to be descheduled, and all stuff our industry sort of waits on. Um, but I can't run my business that way. My job is to reduce risk every day for my investors, my employees, and my customers. And um, you really have to be a realist, I think, with regard to what's available. The other thing that I realized, at least, and again, a lot of, by the way, everything I'm saying here is just frankly opinion, right? Everybody's going to disagree with me. It's totally okay. They're my opinions. Everyone is entitled to their own. Um, I I think that there's some burnout in cannabis specific investors that they had paper returns but not cash returns. So, when you sell your company for $1 billion to do a merger and you don't get any cash out, and obviously there's smaller ones. I think that investors got tired of putting more money in, which is really my point about you have to be in control of your own destiny. You can't need outside capital, right? Um, and we were lucky enough that, you know, we could have not grown as fast, right? I mean, not attractive for investors, but we didn't have to, raise. We wanted to continue to accelerate our growth. There are some projects that we really want to get out the door in 2025, and in our world, things are kind of year-long projects, right? Test, repeat kind of things. Um, so, where I was going with that is I felt it was really important that we create an instrument that I could sell to people who weren't venture investors, right? Venture investors typically want, they're sort of 5 to 10 years investors, and then but they're looking for 10, 20x returns. I was really saying, okay, I want to give someone a really fabulous return, maybe 2 to 5x their investment over the next 5 years, right? So it's current. Um, and that I think allowed us to tap into investors who either did not like cannabis, do not invest in cannabis, or um, really looked at it from a financial perspective and said, this is, I'm in a great position on the cap table. I'm in a great position with my return. The risk profile is there, and I don't care what I'm investing in. I'm looking at numbers, right? So I would say that probably 95% of our cap table, maybe more, has never previously invested in cannabis. And I think, to me, that's important, because one is they're not jaded from the past, and we've created a lot of, I think, returns both on paper and on paper, in cash current. And I think that it's important to always, make sure that it's a win-win. A lot of times founders don't want to give up any equity at all. And I think that's unrealistic. Um, and they want, only the lowest possible interest rate. And so as a result, you spend a lot of time beating your head against the wall, not knowing, where your next financing is going to come from, or are you going to have enough money? And, I think that you have to, as you run a company, you have to be realistic in what's available, and how long it takes to do it.
Yeah, yeah, yeah. I mean, the story is amazing. I think I'd love to tell it at Benzinga. We're going to be out there
Yeah,
in
I
about
have it
30
too.
days. Yeah,
Yeah.
that would be great.
Anybody who wants to grab lunch or a coffee and understand what we did in detail, I'm happy to do it. But to your point, we ended up way oversubscribed. I mean, probably 50%. I would say we really didn't market it that hard. I mean, it was really
yeah,
kind of
not at all. Yeah, it's
friends and
wild.
friends of friends who were like, "Can I get in that deal?" And we're like,
Yeah,
"Yeah, I don't know, we're kind of out of space,
yeah,
So,
yeah.
um, but it's
And it
always a
was
good problem to have.
with 100K minimums. I mean, it's it was really appealing. I wanted to get, I wanted to
Ironically,
get in
we
for
only
the
had one check
kids.
that small. I
Yeah,
mean,
that's what I'm saying. It's
um,
I thought about buying a block just for the kids, so that in 4 years they am I saying too much? In 4 years, it's doubling your money essentially, like
yeah,
pretty easily.
on a
You know,
cash basis, yeah, absolutely.
yeah. All right. How did the cheese do? I know I interrupted you right while you were adding the cheese to your
Yeah,
omelet
yeah.
here.
No,
Did it
I
melt?
don't know. It sits on the other end of the island here, and I'll eat it when we're off.
Yeah,
Though I have pretty busy day this afternoon, so I figured I should eat something before I head out of the house.
yeah, yeah,
Yeah,
yeah.
but
I may run down and grab something here in Saratoga Springs, and then I got to follow up with Al about because it's Hall of Flowers. I was thinking about maybe jumping out to Grand Rapids, and we'll follow up later and see. I'm sure we'll bump. Oh, and I'm hoping we can catch up maybe in Maryland and Forest Hill Wednesday, possibly.
yeah,
I got a buddy that wants to meet up there, but
Thursday I think is
or
when I'm going
Thursday.
to be there. Well,
All
we
right.
was going to be Wednesday, but Al is